Okay, let's go ahead and reconcile month of August. First, we have our credit card, right? Okay, make sure that it is selected right here. All right, here it is, our ending balance, ending date. All right, we're not going to enter it right here because we're going to hold true to using general journal entries, and we will book it in the reconciliation. So we're skipping this one. Okay, so let's go ahead and see what we have and figure out what else we need. Okay, so here's our payment. Here's our refund. All right, here's some of our transactions. Let's make sure we reflect those accurately. Okay, and we're off by $38.17, and that is our charge finance charge that we would normally book, right, at the beginning of reconciliation. We didn't do that this time, right? So we're going to do it using journal entries. Okay. All right. So in this case, it's going to be our interest charge. And what's happening here? Well, one thing we know for sure, right? Our credit card balance will be increased because they will add this amount to our credit card balance, right? The credit card company, the bank. So here it is. And the date we use typically would be the end of the month, but in this case, it is okay. And we have interest and finance charges right here. Expenses going up, it is being debited, right? So here it is. We debit 61,700. We credit 21,100. Remember, we used to do it at the beginning. Again, in previous videos, we explained that interface. Here, we're doing it using general journal entries interface. And again, the power of this interface is phenomenal, right? Once you know it, you can book anything. Okay, save it here. Okay, we're done with that one. And here it is, right? So we're going to check that off. We're at 0, finish now. All right, we're done. Okay, now we're just going to go to the summary. All right, credit card, here it is. All right, we've completed reconciliation. Let's make sure the balances match. Yes, they do. All right, transaction match. All right, here's our payments and credits. They do. Transactions, they do. Awesome, right? And you see it's now included, our finance charges included right here with transactions. So again, we would print this, right? Attach it to our credit card statement, all right? And we're done essentially reconciling credit card statement for August. Now we can move forward with reconciliation of our bank statement for August. Okay, here it is. Let's go ahead and get going. All right, ending balance. Okay, ending date. We're not going to enter any of the transactions here, right? We're going to use general journal entry to do that. All right, let's go ahead and start reconciliation and see what do we have here? Well, we have our checks, right? Because we booked them. Here it is. And you see, we can see the numbers right here. How convenient was that? Okay, and we have the payment because remember, we booked that for our credit card, right? So here it is. And these are the transactions that we still need to book, and that's what creates this difference, right? Once we book everything that's on statement, we will not have a difference. This will be 0. We've demonstrated it many times. We'll demonstrate it again. Now we will do that using, again, our general journal entries. Here it is. All right, everything will be dated 8/31, right? End of the month. Let's get going. First, we're going to do deposits, right? And we want them to be itemized in this specific case on our reconciliation. Going forward in the following month, we'll show how to do it, more rapidly. But in this case, again, let's get it done. So deposits. All right, so all of these are going against sales, but we want them to be itemized during reconciliation. So we're going to hit the bank account individually each time, right? So here it is. Bank account is an asset. Assets are increased when they're debited. Therefore, all of these amounts, when they're hitting the bank account, they have to be debits because they're deposited. Right? Let's get going. Again, we're doing it, so again, you'll see during reconciliation, it makes the difference. We've demonstrated it before, but this is one of those opportunities where we can solidify our knowledge, right? And the reason we do that is that we know the difference, and again, when we have to make a decision on how to book things, we know what we sacrifice and what we gain, and specifically, it's typically the decision between the detail and the speed. But the result at the end has to be the same, right? We still have to be able to reconcile regardless of whether we do it fast and with less details or a little bit slower but with more details, right? Okay. So these are all of our sales. All right. So here it is. Our sales are going up. Revenue / sales accounts 41,100 are increased when they're credited, right? And all of these amounts of sales, right? And they're hitting our bank, and bank as an asset has to be debited. And we can provide a little bit more details right here. So it's cash sales. All right. Details always help, right? Whenever we can provide them. Here it is, right? We're going to book all of this, right, in one transaction, but still on the bank state, on the reconciliation, you'll see that these will be individually booked. All right, so here, let's take a look. Right, here they are. We could have booked it lump sum, and we will, again, demonstrate it in the following videos. But in this case, we do have the luxury of all these details, right? We did take a little bit more time. Okay. Right, still we have a difference. Well, the reason we have the difference is because we haven't booked everything. Still, we have our draws, right? We're taking money out of our business, and then we have some fees. So let's get that done. Okay. Again, we're going to demonstrate the power of journal entries. All right, so this one is going to be draws. Again, end of the month. Good. Okay. And again, we want them to be individually reflected during reconciliation in this specific case, right? So we're going to hit the account individually. So bank account, in this case, it's going down, right? It's reduced, and being an asset, it has to be credited. So here it is. First one is 4,000. Okay. Another one, 500. And one more for 4,000. Right. So each one of this reduces our bank account. Got to have our offsetting, right? In this case, it's our member draw. It's an equity account. Equity is reduced when it is debited, right? Right here, just like liability. Again, it's not liability, but it behaves in a similar way. So in this case, again, it's a contra account, and we show, just like we showed with desktop, how we close it out at the end of the year. But in this case, what's important to understand, this is an equity account, and equity is reduced when it is debited. It makes sense, right? We take money out of our business, and therefore our ownership in the business is reduced by the same amount. So here we are, right? End of the month. Those are our draws. Again, we can provide those details, for example, here. Good. All right, and let's book the service fees right here. All right. Again, what's happening? We know that bank account will be reduced, right? And we want them to show up individually. So here it is. That's our service fee. What else is happening? Well, the merchant account fee is going to reduce our bank account as well. So that's the amount of money the bank charges us for processing credit card payments from our customers. Right, so we just hit our bank account. Now we need the offsetting entries, right? So again, we have our bank service charge. It's not the full amount, it's just $25. But you see, because we're booking them individually, we will retain all this level of detail in our reconciliation. Again, in the following videos, we'll show how to do it lump sum. And again, what's important to understand is the difference, right? If you want to gain speed, you may have to sacrifice the details. It's important to get to the same result at the end during reconciliation. And we have our merchant account. Perfect. All right. So again, this one got a little bit more complex, right? But what's important here is that debits and credits are in balance. This equals this. That's the bottom line, right? What's happening? Let's summarize. Our merchant account fee expense account going up, right? It's being debited. Our bank service charges going up. It's being debited. Makes sense, right? Expenses go up when debited. What else is happening? Well, our bank account is getting hit twice, right, by the offsetting entry. And bank account being an asset, it is being reduced when it is credited. We're good to go. All right, so here they are, right? So let's make sure we reconcile. And we're at zero, right? That's what we want. That's the objective of every reconciliation. There's absolutely no excuse not to have a zero here. If you don't have a zero here, you didn't finish your reconciliation. All right, so let's go to your reconciliation report. Here it is. Double check everything. Ending matches. All right. Deposits. See, because we booked it individually, you have all these details. You have the luxury of these details now. We've shown how to book lump sum. We'll reiterate it in the following videos. Then you won't have the luxury of these details, but you'll still reconcile, and you'll still have a difference of zero. Okay, here we are. Everything is here. Again, we booked it individually, as we showed, hitting the bank account each time for each transaction separately, and therefore we retain this level of details, right? We would print it, attach it to the bank statement, right? And at this point, we're done reconciling August.